Gbpusd Prof, welcome to a trade breakdown on Gbpusd. Today we traded H4 profile and I'm going to show you the trade breakdown for this trade and how we did call. We will start with the top-down analysis. Actually, we were trading a higher time frame profile, which we call it the weekly profile. So we were actually bullish for the week. Looking at last week's high, it was taken off by the first 3 days of the. It was taken over by the first 3 days, and thus we were already bullish for the week. So coming to today, on the weekly profile, we have the daily as our narrative. So allow me mark the daily. And I was expecting now, as we switch to our context, which is H4, which we always expect the first or the second candle to expand. So, but looking at what happened, the first and the second candle, it did not give us an expansion. Instead, it activated a bearish bias. This is a bearish bias. These first two candles are actually bearish bias. Why? Because the second candle closed below the previous candle low. So with this in mind, we already had a profile to trade, which is called H4 profile. So how do we trade the H4 profile? H4 profile, we have our drawn liquidity as a previous daily low. Our bias is actually bearish. Then our narrative is H1. In our narrative, we actually mark the PDRAs, which include either the fair value gap and the previous candle low or previous candle high. So in this case, we switch to our H1. Let's see if we have any PDRAs in this price leg. And looking at it keenly, you can see there is a fair value gap here. And you can also see the previous candle low. So from the narrative, it's here that we switch. From our narrative, we switch to our context. And our context is actually M15. And this is where we just observe price action. We want to see how price is reacting on our PDRAs that we marked on our narrative. So we are saying for high probability price action context, we are expecting either the first or the second candle. So let's see how the price reacted on our PDRAs on M15. So on M15, the first candle, the second candle, we did not have an expansion. So we switch back to our narrative, which is H1. We readjust our lines. We switch back to our context, the first candle, the second candle. We did not get an expansion. We switch back to our H1 and then we readjust our line. And this is where we now got this is now actually the second half of the trading, because the first 2 hours has already elapsed. Now we are going to the last 2 hours of this 4 hour. So the first candle, the second candle gave us a bearish momentum. So we mark this candle that gave us the bearish momentum. We mark both low and high. The purpose for this is that this one will guide us on where to put our stop loss, and this one will guide us on where to enter for this trade. So we switch to our entry time frame. Our entry is now M3. All we are interested is bearish engulf. So M3. So we're expecting an expansion from the first, second, or the third candle. But before we do that, I'd like to examine this price leg where we are interested with the price action. This is our price leg. And there are some of the things that the characteristics that it needs to have. So the first one, it needs to have a fair value gap, which we can already see. We have a fair value gap, not even one. We have two in this price leg. Number three, we need to see a shift in market structure. At this point is where we can see a shift in market structure. And also, is there an order block? And we see an order block, which is this last candle before price goes up. So this point, this swing point, is where we'll put our stop loss. So with that said, allow me to take now my position calculator, drag it all the way. This is where our stop loss will be. Our entry is just right here. Not yet. We've not found a bearish engulf. We're expecting an expansion below. So the first candle gave us a bearish engulf. So we now position our calculator. Our stop loss is right here. And then our entry is right here. And then we are selling this market. So we are selling. And our risk reward is 1:2. So this is the trade. And this is how the trade played. Now, we have something called trade duration. Trade duration is how long is this trade supposed to run as we expect to hit. So we have a clean 2 hours from this was around 10:30. So 10:30 to 12, that's how many hours? That's 1 hour 30 minutes. So we have 1 hour 30 minutes for this price to deliver all the way to take profit. So let's play it. Let's see how price delivered. What time is this? This is 11:39. We still have like close to 20 minutes. And this is now 12. So let me show you at 12 o'clock. This is 12 o'clock. So by 12 o'clock, our price action was here. So what we normally do when the trade duration is up, we just move our stop loss to break even, or you close that trade from the place it is. So when you move it to break even and let the trade run break risk free, this is how the trade went and smashed our take profit. So this is where we smashed actually our take profit. So Gbpusd Prof, I hope you've enjoyed. Please join our Telegram group. We do have our free training, full course for free. Just go to our Telegram group and go through the lessons. And we also have our WhatsApp where we post our signals and our trading thought process every day. Signing out, Obidi Prof.